Hello traders and welcome to another video review. Today is Thursday, November 20th, 2025. Let's take a look at the economic calendar for today. People's Bank of China decided to leave the interest rate at the level of 3% overnight. German PPI is up from minus 0.1 to 0.1. CB Industrial Trends orders from the UK are scheduled for release at noon. Then we have the data from the US. Because it's Thursday, quite unusual. Nevertheless, the situation is unusual as well, because we got just the government shutdown terminated, so now all of the data should be published. For example, building permits, Philadelphia Fed manufacturing index, Philly Fed employment, average hourly earnings, Nonfarm payrolls and participation rate. All of this data are scheduled for release at 2:30 together with the unemployment rate in the US. Import price index, export price index, housing starts, initial jobless claims, industrial production. Everything here is scheduled for release during the beginning of the US session. At 4 o'clock we got existing home sales from the US, and at 7 o'clock we got federal budget balance. Bank of England MPC member Mann will give a speech at 10 o'clock, and at 10:30 we got Fed's balance sheet. At 11:15 p.m. we got trade balance data from the New Zealand. Nevertheless, the most important data for today are coming during the US session, the beginning of the US session, because all of this data, like non-farm payrolls, average hourly earnings, building permits, unemployment rate, initial jobless claims, all of this major data are scheduled for release then. So finally we will get to know what are the fundamental macro numbers for the past month. Now, without any further ado, let's switch to the charts. We start with euro dollar. So the euro dollar is waiting for the data release, and we are down from the level of 1.1657. So as you can see, these equal corrections were very well established and very well provided the technical resistance. So right now we broke below 100 periods moving average, 1.1567, and now we are back below this level, hit 1.1544, which I will change for the technical resistance, and we are heading towards the 1.1471. Nevertheless, we still have to take into the account that the market conditions are extremely oversold, and we might see some sort of the bounce ahead of the NFP payrolls data and all of the others data release, and then volatility might kick in. So for now, movement to the downside has been initiated before the data are released. Now it's time for a technical pullback, and then we will see what the data will be, because right now we can only see the technical levels. The same situation is being observed on the cable. Cable went below the 1.3084 level. Now it's technical resistance, and because it hits the extremely oversold conditions, now it's trying to test it from the below. And to be honest with you guys, as long as we stay below 100 pips moving average and below this technical resistance, the outlook remains bearish, and the next target should be 1.3, basically 1.3. The low is 1.308 here. So this is the low to the pip. Nevertheless, it looks like the British pound is still under the bearish pressure. We can see the consecutive lower highs, lower lows. So bears are in charge of this market, and the publication of the data from the US might increase the pressure even more. It all depends what the data will be. We still don't know. We need to wait for the data release. Now, US dollar versus the Japanese yen completely ignored our scenario of a rising wedge. So now we are deleting this scenario. We broke way above the current levels. So now 155.73 will be considered technical support, and the recent high was made at 157.79. So we are just tad away from the 158.93, the technical target for the bulls. and the market hits the extremely overbought conditions already. Very strong movement to the upside. Why we got this technical resistance here, why we got this level here, that's the level on a weekly time frame chart. You can see this is the high from the January 6, 2025. So if we hit this level, the market will be at the highest level since the January 2025. There is one more level from the July 2024 located at 161.96. Nevertheless, market conditions on the weekly time frame chart are extremely overbought. So please pay attention to this situation as well. Very strong candle on the weekly is being built. Today is Thursday. There's only one trading day for tomorrow, obviously. And we will see how this candle will prevail until the end of the week. So now it's all bullish. So the US dollar is moving higher. How about the US dollar index to show us what is going on? And you can see clearly that we broke above this critical technical resistance 99.72. Now it will be a normal technical support, right? So now it's a technical support, and we are testing, let me just place the line here, we are testing this level here, 100.33. That's the technical resistance, and that's the swing high. So you can see momentum already extremely overbought, but we might test this level and then reverse or pull back. Nevertheless, the dollar is gaining strength all across the board, right? So it's getting appreciated all across the board. And if we switch to daily, you can clearly see that this might be into something as our 100 periods moving average just flatten out here around 98.39. Momentum is still above the level of 50. Look at this, breakout to the level of 50, test of 50, up to 66, test of 50, up to 70, test of 50. Look at this, like a textbook example of a strong uptrend building on the US dollar index. Does it mean the US indices will go down as the market will be in risk of mode and then flight to dollar will happen? Let's take a look at the SP 500. On a daily time frame chart, not much we can see, but on the 4-hour, you can see that there isn't much movement to the downside. Obviously, we got new local low at 6,573, but the major technical support from the October 17th at 6,530 has not been violated just yet. The market is trending inside of this quite tight range between this swing high and this swing low. So there is no immediate sell-off on the S&P 500 just yet. Nevertheless, the breakout below this level might trigger one. All right, so please stay focused, stay vigilant. I guess that the market is still waiting for the data and want to trigger the move after the data is published. Remember, plenty of data scheduled for release for today. The same situation is with gold. The gold is still below the major technical resistance, and now it's testing 100 periods moving average as the rally paused for a little bit, and the market keeps moving inside of this very tight range, waiting for the data from the US economy. And finally, Bitcoin hit our target. Bitcoin hit the swing low 88,587 to the dollar, but this was done on increasing momentum. You can see clearly that there is bearish divergence here. Let me just show you in case you don't see it just now. Let me just take my arrow. So this is the situation. That was the low, and we keep moving lower, right? So this is it, and now we got the situation on the, you can see on the momentum, and momentum keeps slowly but surely, step by step, moving higher. So the movement to the downside is made on a lower momentum right now. So it looks like maybe we might have some sort of the bottom on the on the Bitcoin. You can take a look. I don't know if it will be, there you go, it will be visible here. Major technical support has been tested. This is the support from the March 2025, and the market is ready to at least pull back to the upside. As you can see on daily, we hit the extremely oversold conditions as well. So the outlook for the Bitcoin remains, at least in the short term, a little bit more bullish, but in the corrective wave, especially because there is a technical support that was tested and market bounced, and then there is a bullish divergence on the 4-hour time frame chart and extremely oversold market conditions on the daily time frame chart. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.